Bad credit will be a major roadblock in getting car loans. More than a quarter of the buying public are struggling with less than perfect credit, which creates something of a paradox for lenders. While lending money to people with bad credit carries more risk than lending money to someone with perfect credit, there's too big a market to pass up for making car loans. If you have bad credit, this gives you hope that you can find approval for a car loan. Even though more lenders are making auto loans for bad credit available, should you try to get one? If you have bad credit, there's a reason. In fact, there are probably several reasons, and adding the burden of a car loan can create more problems than you really need. With bad credit, you'll be paying higher interest, 3 percentage points above prime on average. This makes a bad credit car loan an expensive proposition. Why is interest such a big factor? Think of interest as paying rent for the use of someone else's money. The lender charges interest to create profit from allowing other people to use its money. Interest also helps the lender recover a portion of its costs, should you happen to default on the loan. While collection proceedings will allow the lender to recover any remaining balances owed. Interest rates are applied based on the nation's prime lending rate and adjusted according to local economics, the credit risk of borrowers, and within limits set by the government. Lending rates follow a nationally established method of calculation, which causes little variation in prime lending rates from bank to bank. However, in adjusting interest for the wide range of credit risks that may confront lenders, there are greater variations due to the widely differing reasons for having bad credit. If you have bad credit because you routinely skip out on debts, you'll be forced to pay higher interest rates than someone with bad credit who has just opened a business. Delinquencies scare lenders as they are a clear indication of irresponsible behavior. A new business owner, however, will have a low credit score due to credit investigations and additional new debt loads, which are conditions that can point to a responsible borrower. No matter how you got into the bad credit bracket, you're going to have to pay more for your car loan. The only thing you need to ask yourself is, do you need that loan? The money you'll be paying over what someone with good or average credit would pay for a car is substantial, adding hundreds of dollars to the cost of the car loan. If you were to buy a $17,000 car, you might be lucky enough to score a car loan at 7.5 interest in most states with your bad credit. On a 48-month loan with a 20% down payment, you'd be looking at monthly payments of $355.55, with a total of $2,361.44 in interest payments, and a grand total of $17,066.44, assuming a 6.5 sales tax. For someone making the same car loan purchase with a good credit rating at a 4.25 interest rate, they'd be looking at $333.63 in monthly payments. Total interest payments of $1,311.28 and a grand total of $16,016.28 by loan's end, more than $1,000 less in total costs. It's worth your time and money to fix the things that led to your bad credit problems. Pay off or at least pay down your outstanding debts. Clearing away some debt load will improve your score, as the amounts you owe are the second biggest factor in calculating your credit score. If you have any unsettled delinquencies, get them taken care of as well, since a history of making late payments and failures to pay at all have the biggest impact on your credit scores. From then on, make all of your payments on time and in full. If your debt payments are stressing your budget, contact your creditors and let them know what your situation is. They only want your money and will work out an arrangement by which you can make payments that fit within your budget. A lack of communication with your creditors will only lead to more late payment penalties and adverse entries into your credit history, dragging your credit scores down further. How long you've been using credit has an effect on your credit scores as well. If you haven't used credit much in your life, or are just starting out after graduating from high school or college, you'll find that you have bad credit. This is nothing to panic over. This is a rare instance where a car loan for bad credit can help build up your credit rating. Length of credit history factors into 15% of your credit scores, while opening a new line of credit and increasing your credit diversity. each factoring in 10% of your credit score makeup. Yes, your interest rates will be higher than those on car loans for good credit, but you won't have the same burdens on your reputation as people who fail to meet their day-to-day responsibilities. Car loans for bad credit are a possible path to credit repair or credit ruin. It all depends on you and how you make that loan work. If you genuinely wish to fix your credit woes, then wait until you've done some financial fine-tuning before entering into a car loan agreement. But if you must find a replacement vehicle, bad credit notwithstanding, then be smart about it. Make frugal car choices and shop for the lender who can offer you affordable interest rates and conditions. Checking out Federal Auto Loan can help you make the right choices by connecting you with a nationwide network of affiliate lenders and car dealerships from the comfort of your own home. When shopping is made easier, then you're more likely to spend money wisely. And that's the goal of Federal Auto Loan, to make your car loan shopping experience a good one, especially if you have bad credit. Federal Auto Loan. Good credit, bad credit, no credit, all good.